Well, thanks for joining us. I'm Marlon Bowling, your tour guide to the ag commodities. And here on a Thursday, we have a fairly active trading session going on, but we have a lot of stuff going on in different directions. Here to talk about it, I want to welcome aboard Mr. Ted Seifried of Zaner Ag Hedge. He's located in Chicago. And this morning, Ted, we had our weekly export sales numbers that came out from USDA. Was there anything that caught your attention in that?
I mean, marketing year low for the corn, and this is the time of year where we want to be selling old crop corn still. So that's not ideal. But, old crop soybeans still had a pretty decent number. Now, again, we saw that cancellation of 100,000 metric tons from yesterday. That will be reflected on next week's weekly export sales report. But still, a pretty decent number for old crop beans and a pretty decent number for new crop beans. So that demand is still out there. You look at the Chinese hog herd numbers, they're up a little bit for the first time in a while. They're still below where they were last year as profit margins have been really very negative, but they're starting to come back. That hog herd's starting to come back. So that soybean demand, again, still looking like it's there. So right now, Marlon, what we are trying to do is balance these outside market fundamentals with the stock market down again sharply today. With the weather fundamentals that we have, with the near-term demand fundamentals that we have, with the old crop soybean carryover tightness that we have. So really, it's hard to tell, Marlon, which way to look. And what I've been talking about for quite some time is that, at some point, there is a bigger gorilla in the room than, say, weather or grain market fundamentals. There is this inflationary component to pricing that we've had in these markets for quite some time. And if that is going to go away, well, you can have as bullish, if not more bullish fundamentals than what we have today in the grain markets specifically. And yet we can see prices come down pretty aggressively. So that's something that we're watching out for. And this is why we're so nervous and so willing to watch these outside markets and let them at times really take a front seat as far as what we're doing in the grain markets. So it's a very complicated time, Marlon. On any given day, we don't really know which way to look, whether we should be looking at crude oil or the stock market, or we should be looking at weather maps or export sales. So it's going to be a very interesting next few weeks. I guess my gut feeling is that after we saw that 0.75 of a percentage interest rate hike yesterday, at some point, I think the stock market, and maybe you're even already seeing that in the crude oil today, shrugs that off and says, okay, well, that happened. And now there's at least another month before they do it again. They needed to do that. This is the Fed being active to fight inflation. So maybe we have a bit of a recovery rally in stocks here at some point. And if that's the case, I think that gives us upside potential in the grains to focus on the weather here in the short to midterm. But I really worry about what happens once we get out to the middle of July into August about this overall market climate in this inflationary bubble burst.
Yeah, and with the temperatures warming up and the 30-day and 90-day outlooks looking pretty warm and dry, there's a lot more focus again here on the feed grains. Corn right now is trading higher. If you look at July on our futures quotes provided by bar chart, we're 8 1/4 higher at 7.82 1/4. In December, up 11 3/4 right now. Soybeans have been firming up today, and we have the July now 3.5 cents higher at 16.97 1/4. November 4 3/4 higher at 15.28 1/2, and now 1/4. So they've come off of their earlier low by about 7 or 8 cents or so on the soybean trade. In the wheat market, here you have July Chicago wheat now gaining 18.5 cents at 10.68 1/2. This is fascinating market movement here in the middle of wheat harvest. Kansas City is now up by 16 3/4 at 11.50. Well, we're only a penny from our high of the day right now. Minneapolis wheat July is currently 5 1/4 higher at 12.06 1/2. Meanwhile, in the cotton market, you have that July contract 222 points higher now at 145.40. A little bit ago, it was up, nearly 400 points. It's backed off a little bit, but still sharply higher. December up only 78 points. It's at 118.70. Well, we'll pause right here. We'll come back and talk more about our markets. We'll look at it from the livestock perspective right after this. We're talking with Ted Seifried of Zaner Ag Hedge. He's located in Chicago. And Ted, as we get into our livestock trade, you had a comment you also wanted to make regarding the wheat, the fact that we're so strong with the harvest ramping up and we're getting almost right into full swing harvest right now.
Right. And that is exactly the point, Marlon. In a year where we have a short crop, it wasn't as much as we were expecting when we planted it, right? You have these sales that are happening throughout the year, especially when we had such fantastic prices in wheat in that response to Russia invading Ukraine. I think he had a lot of wheat that had previously been sold. So not as much as a normal typical year would be as far as selling during harvest. I've been saying that I think once we get between 35 and 45% harvested in the wheat, that selling pressure from harvest, that harvest selling pressure is going to fall away, and we're going to see that potential for a bit of a harvest low. I wonder if that's what we're getting into here, Marlon. I don't think because of the short crop, there's a ton of wheat, literally, to sell as harvest progresses. I think a lot of that wheat has already previously been sold, and some will go into storage. So I think that's what we're seeing, but it is very interesting, like you said, fascinating to see wheat higher when you've got such turmoil going on in outside market.
Also, with the heat going on, I wanted to take a look at the cattle market. All kinds of death losses being reported out there in the southern high plains, but live cattle are just kind of teetering a little bit on the lower side here this morning on the futures board. We have the August live cattle currently down 32 cents. We're at 136.47. They had been as high as 137.05 before they backed off a little bit. Feeder cattle trade at this moment anyway. We have the August now down $1.92. We're at 171.35, and that's off of its earlier high of the day by about $1.70 or so. Meanwhile, lean hogs, here you have the lean hog market on the August contract, $1.27 higher. It's at 105.60, and that is within about $0.50 of its high of the day at this point. August showing the strongest gains of the day on the complex. Well, Ted, I thank you for taking time to talk with us. Always a treat. Ted Seifried is with Zaner Ag Hedge. He's located in Chicago. That's how the markets are shaping up as we head into the mid-session. Janet?